Welcome to Yes Securities, where we don't just secure investments, we secure your future. In the ever changing landscape of finance, one thing remains constant: the need for a reliable partner. At Yes Securities, we are not just wealth managers, we are architects of financial success. Our experience over the last decade has been a steady and remarkable journey leading to growth in the labyrinth of financial opportunities. We don't just find a way, we create it. We don't build walls, we build bridges that connect ambitions to achievements. Innovation is not just a word for us, it's the heartbeat of every decision we make. Your success isn't just a goal, it's our mission, our commitment to your financial journey. We provide world class solutions across multiple products, catering to institutions, high net individuals, and retail investors across sectors. Because your success is our business. Yes, Securities, empowering tomorrow.
Hello everyone, welcome to Yes FinPulse, a new webinar series focused on technical and broader aspects of finance. At Yes Securities, our mission is to make finance empowering and accessible to all, regardless of background or experience. Over the past decade, we've transformed from a transactional broker to a trusted advisor for both retail and institutional clients. Reflecting on our last session earlier this month, we explored the basis of trend following with moving averages. We discussed advanced techniques and highlighted key concepts such as trend duration, pullbacks, and corrections, offering practical tools for informed trading decisions. I hope you found it as insightful as I did. Building on that foundation, today's webinar will take those concepts even further and we will understand the power of momentum with our esteemed speaker for the day. Let's welcome Mr. Nitin Bagre, who brings a wealth of experience to the table. He boasts of 25 years in technical analysis across commodities, equities, and derivatives. His expertise in both predictive and reactionary analysis makes him the perfect guide for this session. Today, he'll be discussing the next part or more advanced version of trend following with moving averages, making it easy for you. And guess what? If you miss any of our session or want to revisit the valuable insights shared, don't worry. We'll be uploading the entire series to YouTube under playlist named Yes FinPulse. So you can catch up at your convenience. We also want to hear from you. After Nitin's presentation, ask questions and share your thoughts in the comment section. Your engagement makes this series remarkable. Over to you, Nitin.
Good evening, everybody. Today's topic is momentum. We'll try to understand the power of momentum. In last few webinars, we have discussed trends. The basically the price movement, the attributes of price movements are these five things. When there is a trend, and if sentiments are in favor of trend, momentum is in favor of trend, relative strength is in favor of trend, volatility is in favor of trend, then most fastest move in the direction of trend takes place. The fastest move happens when all the five are synchronized. When they are not synchronized, either the correction is happening or some sort of pullback is happening or a slow move in the side of trend is happening. When all the five are synchronized, the fastest move happens. We have already learned much about trend. Sentiment is bit complex. We will be keeping it for last. Today we will be talking about momentum. So what is momentum? Our objective is to understand the power of momentum. So what is momentum? Momentum is nothing but the speed of price movement. So if you plot the price and momentum below that, you will see, notice that momentum just mimics the price. Whenever the price makes a peak, momentum also makes a peak. Generally, when price makes a through or valley, the momentum will also make a valley. So basically, momentum mimics the price. Now, then if it is just mimicking the price, where is the opportunity or what is the difference? Where we'll find the opportunity? So there are two things which gives us the opportunity. Whenever we plot a momentum, it generally tells us overbought and oversold zones and divergences. Out of these two, the divergences are the most powerful tool, you can say, which or phenomenon, you can say, that momentum gives us. Divergences gives us a trade entry. So first we'll look at divergence, then we'll go to overbought and oversold zone. So this is basic. There are many tools in momentum. Lots of tools are there, but this is the basic. Whatever tool you are using, generally this will be the shape. So divergence is how they occur. So the green line is suppose a price, and the red one is momentum. As I told you, it will mimic lower high, lower low, lower high, lower low, lower high, lower low in price, but higher low in momentum. Here it is the divergence. First, here it stops behaving like a price. So when such a difference, generally it mimics, but when it stops to mimic, or that phenomenon is known as divergence. It is diverging from the general price movement. Now the momentum is showing different movement, price movement. So whenever this sort of price behavior happens, we know that bottom is about to be made. Naturally, we'll come to know, or the confirmation will come at later stage, but at least we'll come to know that bottom is about to be made. Probably this will be the bottom. That much we can say. Why positive? Divergence positive because it will give us a buying signal, therefore positive. What is negative? It will give us selling signal like this. Higher high. Here higher high, HH means higher high, but then lower high, suddenly a lower high. Momentum is not making new high, whereas price is making new high. So momentum is diverging from the price, and hence this divergence tells us that probably the top is in place. Probably the top is in place. Sorry, my throat is a bit bad today. One point, important point is that just because the momentum has stopped making higher high, therefore price will also stop making higher high is not a rule. Generally, it will happen. Many times, it do happens that momentum goes on making lower highs, whereas price goes on making higher high. Lately in Nifty, you must have seen this. If you follow my charts in Nifty and my reports, so last 4 5 months there was continuous divergences was coming on Nifty index, whereas price was not following. And then suddenly on 4th June, the price fell. Uh, so it is not necessary that momentum when it stops making higher high, so price should also no. Price may keep on making higher high, but that tells us that the top is not far away. It is very nearby. This idea gives us. We can gather this idea from the momentum. So there are two. two types, positive and negative. Positive for buying, negative for selling. There is one another divergence which is very rare. Rarely we can see it, but it is known as reverse divergence. What happens? The price makes higher high, higher low, higher high, higher low, higher high, higher low, but suddenly the momentum also follows it, but suddenly momentum makes lower low. When such price behavior happens, it is a buy, therefore positive. In case of negative, the price is making lower high, lower high, lower high, but suddenly momentum will make higher high. So these divergences gives us the idea that top or bottom is very nearby. So basically, in nutshell, momentum always follows the price. It mimics the price, but whenever there is a divergence, probably there is a trading opportunity. Very sorry. I am saying probably because not every time there will be trade opportunity. Most of the time there will be a trade opportunity. I'll show you few examples also. So first, there are many types of momentum indicators, but mostly people are using ROC or RSI, MACD, stochastics. Out of these four, RSI is very famous. Most of the traders use RSI, and it has a finer points also, which makes it a largely used or mostly used indicator. Since ROC rate of change has no upper and lower limits, it can go up to any level. Therefore, it makes bit difficult to judge it. Whereas RSI has a limit, it cannot go below zero, it cannot go above 100. MACD also do not have any limit, but at least it has a moving average on it, which cuts it and gives us some indications. Stochastic oscillator is for bit faster trades, but it also works as a momentum. But mostly I'll be focusing on RSI since it is widely used and easy to understand. Strength index, RSI is relative strength index. Its readings are between 0 to 100. Reading above 70 is considered as overbought. Reading below 30 is considered as oversold. It can also determine the change of trend. I'll show you the example. And divergences are very powerful here in relative strength. So we'll take a first example. I have taken example of Apollo Hospital. Since I was looking for examples, and generally alphabetically A comes first, and Apollo Hospital has lot of examples in it. So I took it. Sorry. So this is a monthly chart. You must be remembering when we discuss trends. Uh, I always said that we'll always trade in the side of larger time frame trend. If the larger time frame, that is monthly chart trend, is up, then we'll always look to buy on pullbacks or corrections on lower time frame. This statement I always made. So here also we have to look at trend first. What is the trend? And in that direction of the trend, uh, we'll try to trade, or we'll always trade in the direction of main trend. Now here you can see this is a monthly chart. If my cursor is visible, this high was taken out, and the stock entered into uptrend. It make first pullback, and then again went up, made a top, cut through the first pullback, that is first valley. And at this point, if we are following trend, then at this point we come to know that trend has changed, since it has come down. cut the previous valley. Now this is too late to know. So there should be other methods where by which we can determine the trend change. The objective is to determine the trend change at the earliest, and these methods it gives us very late indication. So last time I informed you about MACD, which gives us early indications. The RSI also is able to give us early indication. I'll now this is the monthly chart. This high was made. The square is represented by this chart of daily time frame. Daily time frame. This is daily time frame. This is monthly time frame. Now here, if you see this top, a high was made, then higher high was made. So this is high and then higher high. Whereas on relative strength RSI, high is made and then lower high is made. So this is the first indication that price is going to turn. Now where it is happening? It is happening above 70. So probably the trend change is also happening. If it would have happened below 70, then we would have called it as pullback or some correction. But since it is happening at the extreme, there is a probability that trend change may happen. At particular this point, we cannot say that trend change will happen, but we can say that trend change may happen, and we can be ready for that. So once this low is taken out, a horizontal red line is taken out, then it becomes a short sell. Now you can see that after this trigger, the price fell, some correction happened, pullback happened, then again it failed, then again some correction happened. So it has come into downtrend on daily chart. On monthly chart, it has taken out the valley and entered probable downtrend. After this pullback on monthly chart, if it would have come down again, then it would have become a confirmed downtrend. But since it did not did that. Therefore, this downtrend was a failure. But still, looking at RSI, we had an opportunity to enter short, and if we would have done that, we would have made a good money. Now, second example, again Apollo Hospital example. In this portion, first we have looked at the top. Now in this portion, when the trend is going down, in this portion, here again you can see that the price has made a higher high, whereas the RSI has made lower high. So when this valley is taken out, it becomes again a short sell. This short sell, after this short sell, the price came down a bit, took correction, and then again it fell down. It fell by a very huge proportion. This done, now can this bottom was predictable? Can we determine that this bottom has happened? Again, we'll go to daily chart. In this portion, a lower high is made, but on RSI, higher low is made. Here lower low is made, here higher low is made. So once this point, high point is taken out, we know that probably trend change is happening, since again it is happening in a oversold zone. Now, one thing you will notice, I'll go back to this chart. From oversold zone, from overbought zone, when price falls, RSI also falls. But if it remains above 3540 level, it fails to enter below 30, then the uptrend is still intact. we can say that uptrend is still intact. But if it comes down to 30, below 30, sorry, when the RSI starts following and enters below 30, then signal that trend has changed. If trend is not changing, then it will not fall below 30. It will remain, it will make, RSI will make bottom somewhere around 40, 35 or above 30. It will not cross below 30. It has crossed below 30 means it is a trend change. Reverse in reverse, if from 30 it goes above 70, then it is a trend change to up. But if the trend is not changing, then it will generally not cross above 60, 65. So here's around 65, the another signal has come. This is above, below 60, 65, another trigger has come and price fell again. Now on third slide, it has gone from oversold to overbought. That means the trend has changed from down to up, and this point is here. Now you can see the how trend traveled. This is the power of divergence. RSI is the most easiest one to tell us the change of trend also, as well as the point to buy also. So I'll repeat one more. When uh, when trend is intact or trend is ongoing, suppose uptrend is ongoing, RSI may become overbought many times. After becoming overbought, it will come down, but it will not enter. It will not cross below 30 if the trend uptrend is intact. If it crosses below 30, that means the uptrend has changed to now downtrend, and vice versa. If downtrend is happening, then it will not cross above 70. It will go up to 60, 65 and will again come down. It will go up to 60, 65 and will again come down and become oversold. So now how this will be helpful in trading? Suppose if RSI is going to 60, 65 and coming down to oversold zone again and again, this is happening. So it is basically not a buyer's market. It is a seller's market. We have to sell on pullback. The trend is down, therefore we have to sell on pullback, not buy in oversold zone. But reverse, if reverse is happening, suppose the RSI is going regularly crossing above 70 and is not crossing below 30, then it is a buyer's market. On every pullback we have to buy. I hope it is what I have explained, you have got it. So divergences and oversold and overbought can be used in this way. One more example. Now here a top is made. Here you can see that again there was a divergence at this point. At this point there was a divergence and the bottom is taken out and price has fallen. This is okay, but if you look at the earlier chart, the RSI has entered above 70. So now it is in uptrend. So though this trade has worked, but generally we should avoid such trades. If it has entered into overbought zone and then falls below or comes down, see here it has not crossed below 30. So this is uptrend. In uptrend we shouldn't short, but still okay. The more riskier traders can take this trade. Generally such trades should be avoided. Now so we have seen that opportunity here, opportunity here, opportunity here. The last this correction, which just completed few weeks back. So can we know this top. So here see higher high, lower high. So this top can be known that price is turning down now. After it turned down because of this divergence, now here lower low, higher low. Now from this point, the trend is changing. Once it enters above 70, the trend is up. And even though it has not fallen below 35 the trend is up. So this was just a correction, because during this correction, the RSI has not gone below 30. It has turned up from 30, above 30. So this is an uptrend. Here we get one opportunity. Here also we get one opportunity. The RSI is making lower low, whereas the price is not making lower low, it is making higher low. So this type we can use divergences. But I should also tell you, since this is a technical tool and technical tools fails many times, generally they work, but few times they fail also. So this is a word of caution. Now this is Asian Paints. It is in sideways trend. It is not in uptrend. It is sideways trend. Therefore, it may not work here. See, you see the price has making lower low, and uh, RSI has making RSI has made higher low, but thereafter also price failed. Rather than going up, it again came down. So such failures can happen. Therefore, the use of stop loss is very necessary. Please do not trade without stops. Have some stop. One more different scenario. Generally, RSI will work very well. Most of the time, it will work. Sometime it may not work. Sometime it may even not show the indication also. Now this is Axis Bank. At this bottom, the on daily chart price was making lower low, and RSI is also making lower low. But if we use stochastic, then it is making higher low. So this time stochastic is giving us the indication and not RSI. So what we should derive from this? At a time we should use at least 2 to 3 momentum indicators, because we don't know which momentum indicator will work and which will not. In this case of RSI, the relative strength is not working, RSI is not working, whereas stochastic is working. So at least 2 3, at least two we should use. It can be combination of relative strength stochastics, or relative strength MACD, or stochastic MACD. So any combination, but there should be some combination, or else we will be losing on trades. So this trade was very nice trade, but RSI failed to give the trade setup, whereas stochastic has given. I told you initially that all the momentum indicators works in same way. The price is making new low, but the momentum is not making, that is a buying signal. Here relative strength failed to do so, but stochastic indicator has given a proper signal. So at least two we should use, and uh, any one of them, or whenever both of them gives the signal, it is a confirm signal. But many times it may happen that one will not give any signal, and another will one will give. Few at on rare times it may happen that both will not give signal. That can also happen, but it will be a very rare. So this is all about momentum. I hope it will help you. And next time we will be talking about uh, relative strength or volatility, whatever, whichever is. Yeah, we'll be talking about relative strength or volatility. I hope this series was helpful to you. I appreciate you taking your time out and attending this. Thank you very much.
As we conclude, let's apply this newfound understanding to make informed financial decision. To all attendees, thank you for joining us. Let's continue this journey together. Stay informed, stay inspired, and stay empowered. Keep an eye out for our next informative webinar. Until then, stay connected with us for more updates. Thank you.